What's going on, YouTube? Time for another exciting recap as we close down the second week of the small account challenge and just another trade day, right? So as we like to do, we start off on the X and we come into what we've been doing, right? So what was the call? What was the thesis here? Posted up, said, waiting for a short sign to appear here, one gap lower, market should hold up for a while, yet scam shorts, right? And so we're going to hold up for a while yet, and then scam the shorts. Just a watch for now. So this gap right here, as I called, was a just watch for now, okay? Because I knew the market was going to come up still, okay? And then I also noted right here, just to my Discord and giving you guys a little hint of what goes on in my premium Discord, 18,675 is topping area along with 5324 area. Those are the resistance levels we were looking for because we were too early to short down here. That is an exponentially large bubble. How did that happen? There we go. And so on and so forth. So, and then I said again on the Twitter, topping resistance now has been hit and met on NQ and ES. That means it's time for the short. Did some shorts. We ended up with that. I think we're above that today. Where's my P&L pin? There it is. Real P&L today. This is what we did on the day here. 31.25, 776 small account commissions. I think it was just about 660. We'll go over that at the end. Let's get into the market. So for the premium group, this is the trade plan here, guys. And our target is still open right now for that lower side short. Okay, so 5,314 is the secondary gap, the one we just noted in that tweet, right? So if we go back right here, this is an unfilled gap right here, and this is the gap that is still to be filled. And let's talk about the target prior to coming in. So I made this for my members, and I said this is 0% fib right here. As long as we stay under this red channel, we will continue the short because we had multiple gaps to the downside. Now, the open was a little interesting because we had that force up right here, right into the red level zone that I had made, shorted, and that's where we made most of our money today. Shorted again, and then, of course, we missed on ES, which would be the gap fill. But more importantly, on NQ and ES, we had multi-gaps, right? So we looked for the first gap fill in the premium chat. That was the trade call that we had been watching and waiting for. So if you look on the NQ here, we had a minute force up gap, and that was back here in the pre. Bam. Where is it? Right there. So this guy was the gap on Qs, 18,000, right about 658 or so, 50. But this 1 minute chart came up, and as I said, where I was still looking for that scam up, right? I was still looking for that big push up, not really looking for any kind of shorts early. I wanted it to run back up. And why is that, right? So why did I post and why did I know that the market was going to head up for a while? Because of extension and rotation, it just got too drawn down. Let's talk about the psychological aspect of the market first. What are the catalysts that we could have pushing us down? Do we have a CPI? Do we have a Powell? Do we have anything going on? No. So the panic dump out coming back down, right, or washing the market out. What's the continuation catalyst, and do we have one? Absolutely not. So from a technical aspect, we came to -2 VWAP and we made a high low. So this was already made, right? This is at like 3 in the morning, Central Time for me. Now what I did is I came through and I took the high-low fib range, just like I taught you guys in the last video. If you missed that, I'll throw it in the description. The link will be there. Check it out. And I did a high-low fib. And then I came in here during the morning hours, right here, checking out the trades. And I'm like, okay, we got a high-low. So we're going to take that box. And we're going to work with this. Now that force up, that scam up, that pressure up was already giving you signals that it wanted to magnet to at least the top of this frame, because we were getting some very big force up squeezes here that are unnatural movements. So you'd just be moving these tiny candles and then blammo, and then you'd be moving tiny consolidation, blammo, and then a little bit of a drop down, blam, blam, back to highs. You're getting very unnatural force ups on the minute chart. And we like to follow those a lot. And if you drop or raise rather to a longer standing time frame, like a 5-minute chart, we're going to see here that 1 minute force up was accompanied by a really good MAC cross. So let's get our confirmations on RSI and MAC up here and take a look what that high-low range looks like. So we are coming into a MAC cross right here. And generally when something starts the retrace, right, a move has already completed to the downside. We have found a base. What's next, right? Well, the MAC has crossed, the RSI is coming off target. So we start making targets, right? So we do the high low of the fib box, and then we start paying attention to our MAC and our RSI. The crosses and the oversold indicators start, and we usually generally target halfway point up. That's going to be your 50% line on RSI and 0% on the MAC. Not really a percent. I don't know what that's measured by, but it's 0 line on the MAC is what we call it. So when these crosses and oversold start to retrace up, we have target 1 for the long to be into the 0 lines. And then if we get into the top channel and above the 0 line of the MAC, we can go further. So what's our obvious halfway point that we always use here at the Trade Garage and BRT? It's the golden pocket, right? So that is a trend direction pick from the 50 Fibonacci we did the high low on. So you got your high low, golden pocket. Now, which way is it going to go? Well, the MAC says we're now into the top channel of the RSI for trend. The MAC and RSI both say it. So the continuation above the golden pocket. So if we were to just give you that little golden pocket right here, you can see that price action dip through, held as support, and then ranged out because it needed to come to the top. It needed to come complete the fib. So a lot of the times when we have a high-low fib range, we retrace the target 1, which is the halfway point, 50%, and the golden pockets associated with. If it holds that target 1 as support, we will push to the secondary target, which is the prior top in which we have seen the creation of the fib. Now let's talk about why we were still aiming short no matter what. Well, the ES had multiple gaps. And when we get multi-gaps, the percentage of those gaps closing same day go way up, right? Way up. So on the ES, we had seen gap 1 and gap 2. Gap 2 still open, gap 1 has been closed. So on that truck up, you can see, just like on the NQ here, the exact same setup persists of high-low. I took the high-low on the fib, boom, boom, same on ES. Let it walk all the way up. Didn't want to hold above, slammed, got that first target, big short, shorted again, all the way back down. Now we're looking for the continuation to the final target of what today will bring us, 53.14. So you got about 4.5 points from where we're at right now for further short. But I said everybody, and we mongoloided a short. We called this short right here really well in our premium group. And this mongoloided down, and it almost got gap on that secondary leg down. And my chat knows very well to get out early. So if you were shorting up here where we said add big position short and it washed all the way out that, you damn better well be taking profits at those because that is a massive move. So let's talk about bear indicators real quick here. I just want to touch on the VIX. Now, VIX gave us a really cool sign today because the VIX had a 12.28 open. So $12.28. This was a gap that was left open since December of last year. Okay. December of last year. That is when this $12.28 5-minute gap was made on the volatility index and has been open ever since. Now let's talk about the gaps and the algos that were happening this morning. Here is your close and open box, right? So the VIX had opportunity to hold finally the gap fill. It opened up right into this blue line. That was the support, right? So we have that beautiful hold line on the VIX. And as long as we're holding that, we have an opportunity to come back and do what? Well, fill the gap on the top, right? So this is what our call was. VIX would hold 12.28 and push to 12.42. That's why we have it charted off here. And with that push being on there on deck here, we looked for that early morning short. So that's why you've seen the SPY pop to drop, right? Because the VIX opened up with a nice little micro gap. And this is the second hidden piece of information that we have here. So not only did we complete the gap fill to the top side, which is this one, we created a opening gap, right? And I said go long here back until the VIX closes this open gap. So when it shuts down pre-market and opens back up live at 8:30 a.m. Central, we have this gap right here, and that was going to be a magnet to drag it back down, and so on and so forth. And right now we're kind of hovering at fresh lows. Market's still kind of right there. VIX will come back with a vengeance soon and push back up. So with all those mixed signals here, we have a couple other main drivers that why I knew it was going to come back up. But not only because it was recycling price action. Again, you're going to see the exact same fib here, high-low in that pre-market. I like to put it on all of them. Let's talk about the last couple confirmations we had on this first dump and why this was not going to hold down. 1 was the psychological catalyst. 2 was the full rotation. 3, we have moving average catch-ups like this. We have a 5-minute 666, which I love to use, SMA. That came back down and hit. That's the first time that sucker's been hit, and it was also a standing target for us in live trading. Because if we look back the last couple days, when we broke out, not yesterday, not the day before, but 3 days ago over the 666 to clear house, we never came back down and tested confirmational support on the 666, so it becomes a magnet when it starts getting close. So the 666 has became super spaced here, super spaced yesterday, and then today pre-market was the first interaction. And you know how I am with live tags. We don't care about after hours or pre-market as much with moving averages. We care about a live tag. So if we zoom in real close right here, you see that purple light dashed line. We see the price action hit, scoot all the way up. That's another reason I knew she was going to come all the way back up. We had the algos from yesterday's pre-market for the Fibonacci and our data candle, right? So we picked this zone off that yesterday. So we'll go over that in 1 second at the last piece. And we seen that pop to drop from the 666 magnet back down. So that pop in pre-market that ran all the way up, dropped at open and came right into the 666, then caused support because this is the first hit it's had in 3 days. So you're obviously going to get a little support there. The 666, you're not just going to expect a wash unless there's some crazy world news, crazy catalyst, CPI, Powell, blah, 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 right? So as the market slowly ticks down for our final last trade call of 4.5 points, let's go into the last little catalyst you should have been watching and how we play Fibbies, because this has the opportunity to come all the way back down to even today. If we get the wipeout is, shit, there's a triple level right here. Where did it go? 2618 right here, 523.37. Holy cow. So this would be the bonus round in last standing short call for me. This is where the market will end up right here of end of day if it wants to do the panic. I would only be in short to the call I made, 53.14, because we're going to get this lower high set up. We're going to get a lower low. That's all guaranteed. These algos are very easily programmable. Now, let's delete this guy because I'm not going to teach you what that one is, but the regular one that we had used from yesterday, and you know how I am about data in retraction of data and how it works. I'm going to delete every other single one, so we're going to focus on the last bit of piece of information here. When Fibonacci completes itself one way, it likes to walk back, okay, the same way. So if I take a 1 minute like this, send it down, it hits the 1618 target, 2618 target, shies the 423.6. That's huge. After the completion of 423.6, if it holds as support, it goes back to the 2618, then back to the 1618. Okay, so let's take a peek at what happened here. Look at SPY and look at the live tag of the 2618. Now we just talked about that shy. Did it hit a 423.6? Same instance as yesterday. Check the video in the description below when we went over this. It did not hit it. There's a space there. So when it came back up to the 2618 to complete, it went, oh, I have an opportunity to come back down here and tag 528.19, which it will today. That'll be the fill. And then it'll probably bounce down there again for another aggressive little chop bounce because we have these rotations that chop up, boom, boom, boom. It's going to kind of look like that for the remainder of the day. So that's the last piece of the puzzle that I overlapped, right? I use multiple indicators. You got max, you got fibs, you got volume, you got moving averages. We collect these, we stack them together to make a very potent trade plan, because the more stacked you have one way or the other, if we have 10 bullish to 1 bearish, we have 8 bearish to 2 bullish, we at least have better sentiment, and that can give us a much safer trade plan, right? To risk management. If these videos help you out, guys, you want to trade live with me every morning, you see the Twitter calls, the X calls, whatever you want to call them. You want to trade on the Apex prop firms, which we also do and we support because Apex is nice. The links are in the description to support the channel. If you feel you would like to, please stick around to the channel, subscribe and like. We'll catch you on the next one. You guys have a great weekend. Take care. Oh, I lied. We're not done. I didn't do the transparency of the Ninja Trader. Sorry. 2 more seconds. We like transparency around here. Where are we at? There we go. Small account challenge. There we go. Here it is for the day. I think it's like 6 something. I hate when Ninja Trader does this crap. There we go. Performance. It's 660.34 on the day. Download the PDF. Boom. Right to the downloads. Fresh downloads. Open PDF. $2,527.54. We are now green. So this is week number 2, 10th trade day. Okay. So that is our weekly profit. We are now at $22,056. So we have now made $7,000. We're averaging now $3,500 a week off a $15,000 futures account. If I can do it, you can do it. Stick around, trade, learn. It's time. All right, guys, catch you on the next.